XRP has taken off exactly as anticipated. We pegged it in advance. I'm going to show you today exactly how and what to expect next, because we do high probabilities but never certainty. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. So in my last video with XRP on February 2nd, which is around just over a week ago, what we said is it looks like a nice clean A, B, C down here. And what we're looking for is a movement to the upside that's greater than any previous move. And we're pegging this. And we put a question mark there because we can only do probabilities, never certainties. And what happened next? Bang. Perfect. Look at that. This is exactly what we're anticipating. We've had that nice reversal. This is called a overbalance of price. Again, I'm going to zoom in over here. This is what we said on the 2nd of Feb before it happened. That's the key, because we need to have the high probability outcomes before they happen, because you can only buy and make the money if you buy before the movement. But look at that. It's beautiful, right? Beautiful. Just bang on, bang on, bang on. But the real question is, how did we identify this high probability wave too low? It's called a wave too low before it takes off. So how do you do it time and time again, whether it's XRP, whether it's Bitcoin, whether it's a low cap, whether it's a micro cap, mid cap, whether it's a brand new project, how do you identify these? Well, this is what I want to teach you, how to do a retracement for wave twos. I've built a course. It's called the Ellie Win Fibonacci course. And I cover retracements on, these are the typical retracement zones. I got a 5-minute lesson on this. This is lesson 3 in the course. It's really in layman's terms in bite-sized chunks. But then how to combine that with Fibonacci price extensions for wave Cs. And when wave 2 and a wave C coincide, it's a very, very high probability setup. And what I have for you is a stupendous offer. My course, Elliott Wave Fibonacci, is normally $997. We've got an offer of £97. It's cheap as chips. You're going to get incredible value from it. But before you even buy the course, take my free Elliott Wave and Fibonacci Masterclass, which will give you a real flavor of how powerful this tool is, how we can identify high probability setups before they occur. So you can get the edge in your favor, which means the probability of you winning, which effectively means making money, goes up. No guarantees, because we can never do certainties, but we can only do probabilities. So take the masterclass, check it out. If you buy my course, you get an invite to my private Telegram. We do workshops over the weekends, and we do some other stuff as well. Community is amazing. Community is amazing. So what we're going to do next is we want to just look at this, right? This movement here, what does it do next? So we did a video a couple of months ago, so XRP is looking likely to smash $3, but now we've had this overbalance of price. Now we're probably going to move towards that $3 mark over the coming months. So we're going to dive into a live chart and take a look. So let's dive into an XRP live chart. Okay, here's a live chart. So just to recap, quick recap. There we go. What I want to show you here is that it's pretty obvious wave 1, right? This is more recent price data. The date is around, January. Yeah, is that a year ago? Yeah, it is a year ago. A year ago, we had this massive surge up to the upside. Then we've had this correction, bump. And now what we're looking at is a wave 1 of a wave 3. Initially, it looked like this was an A, B, C over here. The market moved up. You would have got risk-free over here, and then it made a lower low. Then we identified this as a potential high probability, potential low for a wave 2 of a wave 3. I covered this in the masterclass, by the way, to do wave counts, how it works. And then a movement to the upside. So the few pieces of information that we want to just recap on. First of all, I'm going to dive into a weekly chart. In the course as well, I show you how to use TradingView. The software that I use here is TradingView. Very, very powerful software. What we want to be aware of is the momentum, the weekly momentum. I'm using the stochastics RSI. The setting on this is 8533, and this is a bullish reversal, so we should anticipate XRP moving sideways to up. Doesn't mean it's going to, it just means highly probable, because the momentum, the trend is your friend. Ride it until its end, until it reaches its bend. And the momentum is a good indicator for us to say, okay, we should anticipate sideways to up for 2, 3, 4, 5, 6 weeks before any corrections, and then the next leg of the next move to the upside. So that's a really, really valuable piece of objective information. Then what we said, I'm just going to take the data back to Feb 2nd. We launched the video here, around here, bang, before this market. So the last video we did, where the market was looking like this, and it made a bullish reversal. If you're trading this on this low, you would have done a swing high. You would have went into candlesticks, and you would have said, all right, the bullish reversal has been made, and you would have either been triggered here, or you would have got triggered over here because you would have just done a trailing 1 bar high, and then the market just took off, right? It just went boom, boom, right? And your stop loss would have been down here, right? And that would have been risk. That would have been a really, really good trade setup. But we identified this in advance. Really, really very important to recognize. But now what I want to focus on is go back to our line chart, is what should we anticipate next? So if you've missed this, so what is the next trade setup? So now what we want to be aware of, hyper aware of, is that the momentum is overbought, which means the blue line and the red line is in the upper part, which means for the next few days, 2, 3, 4, 5 days, we should expect sideways to down. Doesn't mean we're going to get sideways to down, but what we really want is the next bullish reversal on the daily chart, like this, and then look for another trade setup. So what I'm anticipating is, well, first, let's just clarify a couple of things. I want to clarify a couple of things. What does this recent move tell us? What does it tell us? All right. What it tells me is that the bulls are back in town. It's too early to, count our chickens before they hatch, but this movement to the upside is quite aggressive and is bigger than any other movement to the upside in this sequence. You can see that very, very clearly, right? That tells me that this trend to the downside, at least this part here, there's a reversal. We're not out of the woodworks yet, but it's a reversal. But this makes it very highly probable that we're going to see the market take off, XRP take off. And we want to prepare for that. We want to prepare for that. So there's two things we want to prepare for. One is going to be this target. I'm just gonna adjust it to down here. Well, and this target. This was like the $3 mark, right? This up here, $3 mark, 2.618. This is measured here, projected from here. Bam. This is the next target that we're looking for. Let me just make sure that is what I've got. Oh no, sorry. That is, well, actually, sorry. What I did here was the more immediate. This wave projected from here, and that's 2.618, which is around the $3 mark. So we should anticipate that now. But what you always want to be aware of is, what if we're wrong? What's the minimum that should occur? Well, the minimum that should occur if we're wrong, and this is where you'll separate yourself. This is called risk management. It's where you can protect yourself from the downside. Is you do this. You say in this last movement to the downside, let's just do it here so it's nice and clean. Bang, bang. We want the retracements, 50, 62, and 78.6. We should anticipate, even though this is a clear indication that the bulls are back in town, we should anticipate a minimum of this. A minimum of this. And how long should it take? I'll do it from here. Do it from, we'll do it from here. Bang. 50%. Well, 38.2 is the absolute minimum, but really you want to be a bit more. 50 would be better, so we'll keep it as 50 in this range, right? So what this means for us, hopefully this is making sense. We want to allow the momentum to go down. There will be another entry, well, I say will be, more likely to be an entry point, but if it reaches this zone over here, bang, we want to be hyper aware that you want to be risk-free. If you got stop losses, move it to break even, take some profits, put it back in your pocket, but then if the market does take off, what we're going to anticipate overall, and this is where we're going to finish, is the bigger move, right? The bigger move is where the big money's made. So let's just say you become risk-free, you've managed your position based on your strategy, and then what's the likely big move that we are anticipating? Well, it's really, I'm just going to measure this wave one here. This is what I wanted to do. Bang. And we want to project it from what looks like to be this wave two low. Bang. And then the numbers that we want are 1.618 and 2.618. And to give the market space and room to allow it to express itself, allow this psychology to express itself. So this was December till it's around 4 months. We're talking about 4 months. Allow 4 months of sideways to up. I mean, there'll be ups and downs during this whole phase. If it takes off and it makes new highs from this particular $1.70 high, this previous high on April last year, and to allow it to hit all-time new highs. So there you have it. XRP weekly momentum's up. We've got this very clean ABC. We've had this overbalance of price, which is this movement to the upside, which is greater than any other previous move to the upside. This movement here is greater than any other previous move. This was the biggest previous. You can see it's 20-30% greater. So this is the first big clue that we've got a trend reversal on our hands. What you should anticipate next, just so we're clear, is a wave 2 correction. So what I'm going to show you here, let me just finish on this actually. I know, because sometimes it's not obvious. It's better to go into a lower time frame so you can see the waves, but we're just going to, for simplicity, we're just going to keep it here. So this movement to the upside that we've recently had, I'm just going to do it like this. I'm not saying it's complete, but let's just say this was the local high. It might go a bit higher before it comes down. Is we should anticipate, let me just do that here. Yeah. If this is the high, I think it will make it a slightly higher high, but if this was the high, we should anticipate the market coming down between 50 to 78.6, which is a healthy wave 2 correction, right? Wave 2s, the thinking is this. This is what you want to get into your mind when you're learning this stuff, is we have an edge on the market right now because what I just shown you, most people are not aware of, especially retail newbies are not aware of this. Even some professionals not aware of this, right? Because they don't use this stuff. But we have this information that says this is an overbalance of price. So we probably got a trend reversal on our hands. The weekly momentum's up and so on and so forth. But as far as the rest of the market's concerned, they're waiting for like a breakout for this swing high and this swing high. Whereas Elliott Wave and Fibonacci really allows you to get very detailed and go, right, we can peg the lows with high probabilities, and then it's all about trade management and everything else. So because the market doesn't know yet, they still think the overall trend is down. So the first sell-off to the response to this movement, which is a wave 1, tends to be quite aggressive, 50, 60 to even 78.6% retracement, right? But when the market becomes more obvious, like a wave 3 takes off, if a wave 3 takes off and then it has a pullback, let me just do it like this. The pullbacks tend to be more like 38.2% to the downside because now it's obvious. Now it's obvious the trend reversal is in play. But we are trying to get ahead of the game by getting in early. So you either would have been getting down here or you're waiting, which is what I said in the next video. It's a bit safer. Wait for the first pullback. Ideally, you want to see a B, C correction. So it'll be more like this. An A, B, C style pullback. Like that. And then look for an entry point based on exactly what we said before. Bang, in this zone. 1 bar high, swing high. There's a few different entry strategies. But there you have it. XRP, textbook, overbalance of price. Momentum is now up. The price pattern and time is all hanging together. So now we should anticipate. So now it's all about trade management. If you're in the position, if you're not, I would personally wait now. Do not try and chase this. It might go a bit higher, but wait for a pullback, ideally in a 3-wave sequence, and then look for another entry point. So let me know what you think about today's content. It was punchy, but it was bang on, right? Bang on. Take my free Elliott Wave and Fibonacci masterclass. I really put in the work to make it as simple as possible so you can see these patterns unfold time and time and time again. If you like it, buy the course. It's £97. We've got a 90% discount. It's ridiculous. I had to pay tens of thousands of pounds over a decade to learn this stuff, flying all over the world, learning from different people that have got like decades of experience. So then I've just simplified it, but it applies incredibly well. I can't tell you how well it applies to crypto and blockchain technology because the speculation is higher. The projects are less mature because traditionally for a project to be on the open market where we see price movements, they have to go for an initial public offering or the project is very mature. Whereas we are getting into projects that are less than a year old, 2 years old, less than even 5, 10 years old. That's still young. And now we're seeing projects that are 6 months old, 3 months old, 2 weeks old. And these patterns are often identifiable. But the more volume there is, the more players, the mass psychology, you'll see this play out again and again and again. So let's finish on a quote. What's the quote of today? Let's have a look. What do we choose today? You must be in it to win it is the name of the chapter, but the quote, see if you can guess the sports athlete. If you've heard this one before, man, repetition is the mother of all skills. So we're going to repeat until we drill these lessons into our mind because it's really, really important, really profound. So here we go. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. Who is it? Michael Jordan. Yes, it's all about repetition is the mother of skill, and you have to kind of just put your neck on the line and learn. And when you put your money to play, you learn faster. So your risk management, everything else. But it's all about knowing that failure is a part of the game. You know, if you're playing tennis, there's a probability of you losing the game, but you have to be in it to win it. And the whole art of happiness. Did you know the art of happiness is the art and science to happiness? If you find the task at hand, whatever level it's at and whatever level you're at, you want to challenge yourself 1 to 4% above your current level. So your level's this, whatever it is, you can kind of get the picture on my level's this. You have to find the level of 1 to 4%. So when it comes to Elliott wave, right? In the course I've covered foundation, intermediate, and advanced, right? And I've simplified it more. But initially, you're just going to look at the single wave counts, just macro 1, 2, 3, 4, 5. And then when you get familiar with that, then you'll move on to the intermediate, which is waves within the waves, and there's particular rules that just allow you to see what's likely to occur next. So that's the next level. And then there's the advanced, where we're combining a few different things. Same with Fibonacci. Fibonacci, the first one is just retracements. A movement to the upside. What's the typical retracement? That's basic, fundamental Fibonacci ratios. But then we're going to look at external retracements. Most people don't even know about external retracements. And then extensions, the relationship between wave 1 and wave 3, the relationship between wave 1 and wave 5, and the relationship between wave 1 and 3 and 5. They have all these dynamic relationships. Once you can understand the psychology and having the things come together, and then we add momentum. Then we add momentum into the game. Okay, then we got pattern, price, and momentum. When you get 3 of those combining and coinciding, you got a very high probability setup. Probability, never certainties. I hate it when people just say, Jigay, you said this was going to happen. I never say it's going to happen. I say it's highly probable. So that allows us to have a proper risk management and look at if we're wrong, where do we want to become risk-free or mitigate or minimize our risk? And if we're right, then how do we ride that out and have that business plan in play? And for you to take full responsibility, because I'm a believer of give a man a fish, feed him for a day, teach a man how to fish, feed him for a lifetime. And that's what we're about. We're about teaching Elliott Fibonacci, reading the markets like a pro, so you can have the fundamentals and you can rely on your own research, your own analysis, with the support and the guidance of myself and other people. But ultimately, you have to take responsibility because, losers look out the window. When something goes wrong, they look out the window. Winners look in the mirror because when you look in the mirror, you can do something about it. When you look out the window, you can't do nothing about it, right? And that's the key. All right, we're going to wrap up. XRP has exploded, but it's early days. Mitigate the downside. So we're going to be very, very mindful of that. Expect a wave 2, and then just be. You want to get mechanical, objective, and non-emotional. All right, I'll see you soon.